early on, early in 2020, I mean, we were in a bull market, and you could buy pretty much anything. You could put your list of stocks up on the wall and throw a dart at it, and you could buy something and it would go up. But now it's definitely a different environment, and I think retail traders are really struggling now.
Hello everybody, this is another episode of After Hours with Traders with Ardi and Brian.
Hey, good afternoon or good evening, wherever you are.
Yeah, I'm excited to be here.
Last week of January, what a month, what a start of month in the stock market. So very volatile. How was the week, Ardi? What happened this week in sectors and performances?
Yeah, it's been crazy. I mean, we're recording this on Thursday night. Hopefully our members and our subscribers will see it on Friday, but it's been a rough week. We're down, I think, almost 12% on SPY, really close to bear territory on Nasdaq. Sectors have absolutely 12% down on Nasdaq. It's been really tough for a majority of the sectors, especially discretionary. So it's been rough.
Yeah, I would say definitely agree with that. If you're pretty much invested as a long trader or long investor, yeah, you've had a rough month. But yeah, if you've been short, it's been good. But trading in a short market or a market that's going down is a little more difficult because volatility goes up, and you see a lot of volatile moves that when you're trying to manage your risk, if you're an active trader trying to manage your risk, and get shaken out of trades. So it's been a tough month overall.
Yeah, so the only sector that was actually green last week, or this week we are finishing it, is the energy that is up 3%. Yeah. Everything else is in the red. So we had the treasury yield curve, and that's one of the things that people say, when it's flattening the yield curve, that's the sign of recession. What is that? Can you, maybe Adi, you mentioned that one.
Yeah, I think so. There's a couple of things that were signaling a little bit of alarm. One of them is the yield curve, of course. Yield curves are getting flatter. That's not good for financials, of course, because they borrow in the short term, lend out the long term. So the flatter the yield curve gets, I mean, we can have a picture that shows the yield curve. It's bad for financials and overall health of the economy. And the past 7 recessions, I think, been correctly predicted by an inverted yield curve. And we're getting really close to flat to inverted yield curve. And Wednesday, Powell was asked this question, and he said it's not Fed's job to kind of monitor the yield curve, which was an interesting answer. And as you noticed, when the statement came out, market actually ripped. But then when Powell started talking and he said really hawkish stuff like that, market started selling off. So that was interesting.
Yeah, I think when you're talking about the yield curves, I think Adi's basically talking about the 2-year yield versus the 10-year yield is typically the two that people look at, and the closer those two rates come together, that's considered to be a flattening of the yield curve. So when they invert, a lot of people believe that inversion of that yield curve, in other words, when the 2-year rate goes past the 10-year rate, that's a sign of recession or impending recession. So when we're talking about the flattening of the curve, that's, you want your longer rates at a higher level.
Well, when it's lower, it means that people are expecting a recession to come. That's why the shorter term interest rates are higher. So the Feds had the meeting. The statement, the press release when it came in, they said that as expected, they're going to increase the rate starting March, and they're releasing some of their assets. But they also said that because the economy is strong, so they don't need to really keep the rates low because they want to control the inflation. Yeah. So it's a two thing. Can you explain, what's the Fed's exactly position here? So we have a strong economy, but a high inflation?
Yeah, I mean, Fed really has to raise rate, and it has to raise it fast because, we're almost at full employment. So things are very well in terms of employment. And the other mandate is inflation is out of control. One of the interesting things, if you could put a chart actually in the screen, is the corporate bond yield spread. There is no spike in the yield spreads at all, which usually when there is economic uncertainty, uncertainty about growth, like in 2018 with tariff wars with China, we see the yield spread widening. That kind of signals uncertainty. We have not seen that at all. So, economies are strong. Fed has no other choice but to raise rates, and we know markets don't like that. So,
But is it already priced in, or is it going to go lower?
Well, this is the $100,000 question. I mean, we've seen a lot of companies stock prices pull back. A lot of them that have had extremely high PEs. I think even Tesla's is at 80. At least it was before today, which it lost about 10% of its value. But we've still got some very high PEs, and as earnings projections start to drop, that means that the PEs have to come down, which means the prices have to drop. So we've seen that. We've been seeing that. We talked about it last week, and the question is, are we at a point now where the market's starting to feel comfortable with where the current PEs are?
Ari, we discussed that. Do we see any sign of bottoming, or
I've been saying it for a week now, but I think we're getting close. I think this is the week. So we've talked about VIX backwardation. So interesting thing happened today. Market went down, but so did the VIX. VIX didn't spike its previous high on Tuesday. So that was a good sign. And another thing is, VIX natural term structure is contango, meaning the higher in time, the more volatility you should experience. Anytime we get into backwardation, that usually signals bottom. So that means, okay, there's a lot of mayhem in the market, there's a lot of risk adjustment and hedging happening. Jared in the chat room has been talking a lot about it. So that usually signals bottom or getting really close to bottom. Speaking of PE, Apple just reported earnings. Their next year PE is at 20. So a lot of the froth is coming out of the market,
Yeah, so that's a good thing. So it means that the futures for VIX, which is the volatility index, are less. So people in the future market, they're believing that the volatility goes down. So that's one sign. And even today, the market sold off, but you said the volatility didn't go up. So it was not panic selling.
And the SPY pretty much went out flat. I mean, I think it finished maybe a couple points off or something, but we didn't have another massive sell-off like we've seen in the last couple of days, like we saw on Wednesday. So it's kind of giving you some comfort there anyway, that the VIX is dropping and we're kind of seem to be reaching a bit of an equilibrium here.
Nice. But this drop, are we in a bubble? Is the bubble bursting, or is it too early to write the history right now?
I think it's early. I mean, I think when you take a step back and you take a really high level view, most people believe that the U.S. economy is very solid. I mean, as Adi mentioned, the unemployment rate almost, essentially it's almost full employment. Economy is good. Yes, inflation is running high right now. I think some of those factors are hopefully transitory. I know we're not supposed to use that word anymore, but I think that's the underlying message is the U.S. economy is pretty strong right now.
I mean, it's so simple and tempting to make the comparison to 2000 and say it's the bubble, but we are far away from 2000. I mean, Apple had $35 billion in net income. I mean, these companies are not 2000 companies, the companies of the bubble. They all have really solid revenues. Most of them have really solid business plans. I mean, they're free cash flow positive. They might not show net income in the income statement because of accounting reason, like stock-based compensation, but they all have free cash flow. They're free cash flow positive. I think the 80% drawdowns that a lot of bears on Twitter are saying is coming for NASDAQ, unlikely.
That's a good point. That these companies are not 2000 companies. All of them have strong revenues and solid balance sheets.
But I do think you do have to be a little bit careful, because there are a number of companies out there that don't have earnings, or they have very little earnings. They're losing a lot of money. So, and I think this is where it's becoming a bit of a stock picker's market. You've got to be positioned in companies that have solid earnings and revenue, and sort of stay. I think at this point you got to sort of stay away from the companies that don't have any earnings or have very little earnings and very little prospects in the near future to show that. So I think that's where money is been rotating out of a lot and looking for value. They call it value, companies that are solid. Like we'll see what happens with Caterpillar tomorrow.
Oh yeah.
Companies that make things that, when you drop them, on your foot, it hurts, that kind of stuff, right?
Exactly.
So speaking of earnings, we had a couple of really big ones this week. Netflix, Apple, Tesla, and some credit cards, Visa and MasterCard.
Yeah.
So how was the earnings, Ardi?
Apple was after hours.
Yeah.
It was fantastic. I was actually betting against it, just following the same pattern as Tesla and Microsoft. I thought it would go down, so I did a really tight spread, bearish spread. It's obviously going to expire worthless tomorrow. But Apple had a really good earning, solid demand. I mean, Visa and MasterCard really stood out for me because these show the health of the economy, and they were pretty solid as well. So
that's good. So Apple traded up 5% after the earning. So we're recording this on Thursday. You see it on the Friday. So we'll see how it goes on Friday. Netflix dropped significantly, 20%, because they couldn't see the projected demand for the new subscribers. And Tesla also. What was Tesla situation?
Tesla was, Addie and I were just talking about this before we started here, and I never would have thought Tesla would have sold off as much as it did today. And I guess, maybe investors were disappointed that Elon didn't come out and talk about more cars. Instead, he started talking about a robot, and that could be the future of Tesla or the next product launch. Yeah. And I know he's been working on that. It could be interesting, but today investors didn't like it. They didn't like what he said or something. So we got a lot of selling today on Tesla.
So the forward PE of Tesla is 80.
It's still really, really high.
It's still really high.
It's still really high. Yeah.
I mean, it used to be 300. So the point I'm trying to make is we're getting rid of a lot of the froth in the market. I mean, 80 is still really, really high, but yeah. I mean, he promised a $25,000 car. He did not mention that, like a low version car. The Cybertruck is nowhere near production yet. Maybe 2023, maybe. So a lot of bad news for Tesla.
I thought actually, the one thing about his $25,000 car, I think that's maybe not a great thing, because a lot of people are arguing that, if he offers this $25,000 car, he's going to cannibalize maybe a lot of sales that he wouldn't have made with the Model 3. I don't know. Certainly Tesla's been the leader in terms of electric cars, so you could argue that, the lower end of the market still is unserved, and people would buy into that without him losing a lot of the Model 3 sales. So kind of a, question mark there.
Exactly. Actually, we cannot speak about Tesla without Bitcoin. Talking about Bitcoin. It's going to have a lot of unrealized loss because of their Bitcoin holding, impacting their earnings too.
Oh yeah. Bitcoin is down 50% almost from highs, and that's definitely impacting all of those companies. So another big earning we had, which is a topic of our discussion about retail trading, people like us who are trading in the market versus institutions and banks. And that earning is actually Robinhood, which the name is Robinhood, means that we are for the little guy, screw the big guys, we are here to support you. It's been in a big downtrend from the highs of $80 now to $10, $11, and had the earning today, and it was apparently a massacre in the after hours, down 10%. Yeah. So what's the story of Robinhood?
Oh, Brian.
Well, I think, obviously the Robinhood depended a lot on options trading. And I think they had a fair amount of their earnings were also in crypto space, I believe. So, they, with the markets the way they've gone, I think it's left a lot of retail traders a little disillusioned. Early on, early in 2020, I mean, we were in a bull market, and you could buy pretty much anything. You could put your list of stocks up on the wall and throw a dart at it, and you could buy something and it would go up. But now it's definitely a different environment, and I think retail traders are really struggling now.
Yeah. It's so funny you said put a dart at it. Dave Portnoy literally did that. Remember in the early days when the market was bullish, and he was like, put in 3 names out of a jigsaw thing, and then it's like, I'll buy it and it'll go up tomorrow.
He actually did. It's ZXF or something. He came in and he bought it and said tomorrow it's going to go higher.
And it did go higher.
It did go higher. Yeah.
T. See, in Son, it's not any. You think this is easy? I can't even find stock buy. You're making it sound anything. This is way harder than I thought it would be. R. RT. Is that going to give me anything? RTX, Raytheon. 8 point. All right, done. Raytheon Technologies. There it is. RTX. We're going with it. RX it is. Raytheon it is. RX. Wait, what was it? Raytheon? Yeah. RT. RTX. Raytheon. Don't know nothing about it. 200 grand Raytheon. Market. Order. Done.
That was the time that when a company like Zoom, which is the ticker is ZM, people were actually buying ZOOM without knowing what it is. They're just going up because the name is.
Was it OTC stock? I think
it was an OTC
yeah,
stock.
But people were buying it because they thought there was some association.
Yeah.
And this is typically what's happened. I mean, it happened during the dot-com bubble. I mean, all you had to do was you had a company and you put .com behind it and everybody bought it, and it was easy, easy. But now it's. Now we're in a different environment.
Brian, you traded the .com.
Oh yeah.
How was it?
Oh, it was like 2020. It was a little like 2020.
Crazy.
Yeah, it was everything. Like I said, this time around, you had to associate yourself with Bitcoin or blockchain. Before it was anything that had a .com after it, went up. So, yeah, it's the more things. What do they say? The more things change, the more they stay the same.
Exactly.
So, yeah.
Yeah. So speaking of this trading, there is a chart that we're going to show that. It's from Morgan Stanley. It shows the estimated profits and loss of retail trader versus the S&P 500. And the chart is very interesting because until the early 2021, based on their estimate, which I don't know where they got, they actually beat the S&P 500 retail traders, all the GME traders and stuff. And after that, it started going down. And maybe that's where the Robinhood really dropped, because retail traders, only 17 million active users, but I think they have over 30 million accounts. There's a lot of people that started trading Dogecoin. There was a lot of revenue from trading Dogecoin, the community of Dogecoin traders, which
I don't know, on that chart, I think now it shows the importance of like risk management and knowing what you're doing, and like kind of what we're preaching on a day-to-day basis at Variable Traders and Peak Capital, like having a trade book, knowing what name you're trading, why you're trading it, if you're doing a swing, what's happening. So that early making money, put a dart, that market is over. So if you're a retail trader, definitely,
Yeah, it's not about making money, it's about keeping the money in the market.
And that's a very important point. Before last year, I mean, like I said, we could have thrown a dart at something and we would have seen it go up. Now you really have to get a little bit more involved in your investments. You have to understand what you're investing in, as Adi and Andrew are saying. You've got to do your due diligence. You've got to manage your risk. You've got to treat your portfolio. If you're going to manage it, you have to act like a professional money manager, basically.
Yeah, exactly. Yeah.
Which is what we do here.
That's what we are really trying to preach, that even for swing trading, when you're taking some big positions, hedging with options and risk management, very, very important. So, that's pretty much it. The world of Twitter, Adi. So the funny part, one of the funny thing about trading is just memes in Twitter, and people are funny. Adi, you want to talk about obviously JPOW was the topic of a lot of memes that we see one of them. I crashed the whole thing now.
I'll do more QE next year.
Quantitative easy
Yeah,
mix.
but Andrew, the one that you posted was really funny. The man with no coffee lid coming to save the market. That was pretty
They
hilarious.
say that, you know, make your own coffee, one of these wealth hacks. That
Yeah.
Make your own coffee, save $2. That's, you know, this guy doesn't make any coffee at home and he's running our financial systems.
But the other thing that happened in Twitter, I think is worth talking about is, of course, CEO of Tesla, which is on our show every
Musk
night.
always,
He
yeah.
talked about he would eat a Happy Meal on
McDonald's.
McDonald's,
So so Dogecoin community, they want to, you know, I don't know if he did it half serious or half as a joke, but he mentioned that I eat a Happy Meal on McDonald's, you know, as an advertisement if they start accepting Dogecoin, and that was really funny. Again, probably half of it was serious.
Why is he doing that, Brian? What's going on in his man's brain?
Yeah, he's definitely a very interesting person, and it's really definitely fun to watch him.
I mean, I would do the same if I sold right at the top. He sold his Tesla shares at 1,200. He's the best trader alive.
He did mention that you know, Tesla's share price is too high in my opinion. One time I remember that, and then the stock was dropped. Another time was the famous 420 private. That was another one. So earning next week, we have a tons of great earnings, including I see, you know, Meta is reporting, Amazon, and so what are you looking for next week?
You know, earnings season's grinding on, and I guess we'll see. I mean, I think some of the things you can take away from this is, you know, unless you're really blowing out your numbers in terms of earnings or, you know, your bottom line revenue, you're probably going to, you know, you're going to get a lukewarm response at best. You might even get sold off. And of course, everybody's now just primarily focused on guidance, what's being said by the CEOs or CFOs after they come out with those numbers, because they can come out with some great numbers, you know, beat all the estimates. And if they say, oh, you know, the future doesn't look that great, or we don't have a lot of visibility, then, you know, that's pretty much going to be a recipe for a drop in the stock price. So, yeah, I mean, it's going to be interesting. I can't make any predictions at this point.
Market.
Yeah, other than you know, like I kind of agree with Addy. It's probably we're probably gonna flatten out here. I think we're kind of getting to a point where we've sold off enough. So
Yeah, but memories of all-time high is still fresh. And I want that. I want that.
Yeah.
But I never thought that I missed 2021. Really, I would never imagine that I missed 2021. But the January 2022 definitely has been tough and hard.
I'm looking forward at Amazon's earning next week. Amazon's at 52-week low, which is shocking.
Yeah, why is that? Is it part of the...
I think their AWS market share is declining, and that was a huge breadwinner for them.
Yeah.
So there's a little bit of, but I think at this point it seems pretty oversold to me. So I would look for some strong earnings, and then potentially after the earning, play it with options, maybe a risk reversal, selling some puts, buying some calls.
Yeah, so those of you who are not a member, if you come into the chat room, Ardi has you know, a couple of times a week talking about this, trades live, and obviously Ardi also has a library of education for options trading. So we want to add a section to this program called Ask a Trader from a Trader. So if you have any question from us, you can just type it in the comments and we'll get into that. And we want to start from Sajjad Khan. He asked Brian a question that if we enter a bear market, I mean, we're not officially in the bear market, but we are entering into a the correction bear market, can you trade on the long side, or you have to also always be short? And can you make long side on a bear market?
Again, it's, you know, we're in a bit of a stock pickers market. So you know, we've already talked about what kind of stocks you really need to focus on. You know, you can certainly take long trades and be short. You know, you've got all sorts of ETFs now. I'm not sure if this is answering the question specifically, but if you want to go long, for example, TZA, which is an ETF that is essentially puts you short of the IWM, you know, you can trade that long, and it'll go up when IWM drops. And we've been trading that. I've been flipping over and trading that a little bit during the day trading sessions. So, I mean, that's one way to go long in a bear market. There's lots of other examples. Won't get into, but you can short anything by going long one of some of these ETFs.
I like what Jim Cramer says. There's always a bull market somewhere.
Yeah.
So if you're a long bias trader, I mean, look at energy. Energy is up. Chevron's ripping.
Yeah.
Think a little outside the box. Maybe look at Brazil. Brazil's market is
Yeah.
ripping right now. So
Yeah.
if you're a long bias trader and you want to do swing, not intraday, there's always a bull market somewhere.
Yeah, you're looking for pockets of strength. I mean, I've been long this energy. I've been long an energy ETF for a couple of weeks now, and it's done really well. And while we've been watching the rest of the market sell off, so and natural gas has been really strong, and I think that's in part probably due to the conflict that we're seeing in the Ukraine now, and maybe shortages of natural gas in Europe. So. Yeah, there is, as Artie says, there's always pockets of strength that you can find if you look, and you don't have to look very hard.
Yeah. Tony is asking a question. If you can have one strategy for trading, what would that be?
That's a tough question because I think of the market if I'm day trading, I think of the market in terms of sort of two different times. I look at that first 15 minutes as, you're looking for momentum trades, like we found today with, I think it was, trying to remember what stock it was now.
Tesla, you shorted Tesla?
Yeah, well, some people shorted Tesla, but there's something popped up in the open, I can't remember what it was. Regardless, I mean, in the first couple minutes, I'm looking for momentum trades, something that's going to catch a bid, go higher. As we get into that first half hour, I'm not looking so much for momentum trades anymore. I'm looking for 920 trades. I'm looking for stocks that are maybe strong or weak that are going to come up to touch the VWAP and then bounce. So those would be, those would kind of be, if I had two trades, those would be the ones that I would really like.
For you, Artie?
Brian,
Selling naked calling the show.
If I could use one strategy, it would be selling premiums. I think it's very lucrative. Yeah.
For me, it's opening range breakouts at the open, usually 5 minutes or 1 minute or 2 minute opening range breakout. So if you have any question, guys, feel free to just post it into a comment section. We're getting into that next week, and hopefully we can actually have more and more of these videos recording for you. Feedback, highly appreciated, and like and subscribe to our channel, also very, very appreciated, guys. Anything from you?
No, just we'll see what Friday brings. There's a few earnings this tomorrow, like we've got CAT, we've got a couple of the oil companies, and we'll see what happens as we go into the weekend.
Yeah, exactly. Excited for next week. Yeah, definitely subscribe, hit that notification so next time we're here, you get notified and you can watch us.
Yeah, thank you, guys, and have a good day. Have a good weekend.
Thank you,
Bye.
everybody.
Thank you.
Cheers.